Welcome back. You're tuned into Market Fatafat, where we are taking you through all the stocks that are in focus today. And now on the technicals, we're joined by Dhwani Patel, who's the founder of Diversify, and from our research team, we're joined by Gaurav. Hi, Dhwani, welcome on board. Let's get started then, Dhwani, with you picking Escorts Supporter as your first stock. Tell us, what are you seeing on the charts for this counter? It has been in a corrective phase in the last 6 months. From here on, do you see a reversal coming in on this stock?
Yes, definitely. In today's session, we've seen that Escorts has given a bounce, and on the lower side, the base formation is what we have seen somewhere around 3100 levels, and from there, the confirmation of the trend has taken place. In today's session, the stock is soaring above its 20-period DMA and the daily charts, and over here, the volume increment is also picking up. So from the current levels, one can go long into it. On the higher side, the target that I'm looking up at is at 3550 levels, and on the lower side, the stop loss that now one needs to maintain for this counter is going to be of 3320.
Okay, 3320 as the stop loss, and positive view coming in on Escorts Kubota. Let's talk about a stock that's in focus today and doing pretty well for itself is Manappuram Finance. Now, shares of this company have gone up today. They're in focus after the company's unit Asirvad Microfinance was granted relief by the Reserve Bank of India yesterday post-market hours. The central bank lifted sanctions on the disbursals of loans on Asirvad that were imposed in October of last year. The restrictions were imposed after concerns over the pricing policies of the company, and the restrictions are now lifted after submissions were made to the RBI committing adherence to regulatory guidelines, and RBI is satisfied by the corrections that the company has made when it comes to its subsidiary. And the stock has given up all of those initial morning gains because at one point of the trading day it was trading as high as 6%, simmered down slightly, nonetheless in the green. Morgan Stanley has also weighed in on this, and they've maintained an equal weight rating with a target price of 175 rupees per share, which is currently lesser than the current market price, but nonetheless the stock is doing well for itself today, almost 1.5% higher.
Alright, moving on from Manappuram Finance, up in every 1.3% in trade, to Swiggy, that's in focus today. Gaurav, on the back of a brokerage note, tell us, what does the brokerage note say?
Well, yes, Swiggy is in focus, and the reason being that now Bernstein is being bullish about the company. They have initiated with outperform rating and a target price of 635 rupees. What they're saying is that Swiggy is going to be one of the winner in India's convenience economy, and at the same time, they also believe that the company will benefit from the shift to super fast delivery model. Now, when we talk about the Swiggy's business model, what they're saying, there we know that it is actually a duopoly with Swiggy and Zomato. So they believe that duopoly structure is likely to sustain, and at the same time, currently the company is at a reasonable valuation, and there is also potential for re-rating. With this, what they are expecting is that 21% growth is what we can see in the food delivery, and that is the reason why they are being bullish on Swiggy. In fact, when we talk about stock performance, the stock has gone up almost by 20% ever since its listing, and it is now hovering around 500 rupees level, and it is also up almost by 2.5%. So definitely watching out on this counter on the back of the positive brokerage note coming up from Bernstein.
Okay, so that's the reason why Swiggy is in focus today. Very positive note coming in from Bernstein. But Swiggy has a new offering as well called Swiggy Serves, and has partnered with volunteer organizations aiming to reduce hunger and malnutrition. My colleague Sumita Karir caught up with the CEO of Swiggy Food, Rohit Kapoor, to understand the company's growth plans going ahead. Listen into a snippet of that chat.
400 cities is a lot. 400 cities pretty much covers most of the India where we want to be. But I think we will expand to more slots. So you'll find it at late night, you'll find it early morning. We'll expand to pretty much every part of the 400 cities we are in. So there's a lot of optimization left. But in terms of city expansion, I think we're already there. We just went from 0 to 400 cities in less than a month.
Wow. Okay, so will it be able to supersede quick commerce as a vertical?
Different completely. I think quick commerce is a very large opportunity by itself, because what is quick commerce was earlier only grocery, now it is multiple other categories, right? So that's a very large category. I don't think this is competing or anything. It's just a separate use case which consumers have. And we have taken a lot of learnings from what we do in quick commerce, because I also run the logistics for the company entirely. I think the learnings are common, the principles are common. It gives a lot of confidence that we can do it. And I think execution is going quite well.
So help us understand the competitive intensity in this segment, because quick commerce is one segment that brokerages, investors, everybody has been really, really bullish on, and which is why we've seen a lot of competition also get into this sector. A lot of new players are getting into the sector, and the SKUs are also increasing. How are you looking at competitive intensity, and how does it really change the retail landscape with respect to e-commerce?
Look, we are not a competitor-obsessed organization at all. That's not our DNA. We are a consumer-obsessed organization, right? We were born in competition. So it's a fact of life for us. Like when food delivery started 10 years back, now people forget there were 8 or 9 players, including well-funded global players. Amazon in India tried it, right? So I think being part of competitive market, like if you're doing something attractive and which has legs and which has scale, you will have competition, right? I think we don't think about too much because frankly, companies will come, companies will go. We'll have to do our job. I think more 99% of my time and the management time goes in just talking to more consumers, understanding what better, what can we add, what is not working. So competitive intensity is nothing, is for analysts and journalists to spend a lot of time over. It's not for me.
Okay. Do you want to give us some numbers on your New Year orders? Because I remember when we spoke last, you mentioned that it is special events that really sort of, give you a massive bump so far as your orders and revenues are concerned. Do you want to give us a sense?
We had a record New Year for sure, right? I think also it was operationally the easiest New Year because we are so well prepared now that earlier when, especially 7 to 11 p.m., you used to see a huge spike in orders and sometimes orders will get delayed, etc. at scale. But this year was the calmest. I was in office till like midnight. And not because we want to be at office in midnight, because there's some... but this is one of those days when I think sees the most peak load. And senior people have to be involved to make sure that things are working well. I think just one of the most fabulous New Years, not just from volume standpoint, but the level of customer service we were able to deliver on that peak day.
What are some of the SKUs that you're looking to get into, and what is really the growth plan that you have? What are going to be the key focus areas for you in 2025?
Look, Bolt is one for sure, right? Within food space, I think on Instamart you will see more categories being added. They're already being added. I think that is not stopping. I think you just will see the SKU pod expansion happening in a significant way. You will see SKUs that a consumer gets to access on Instamart just growing in a disproportionate way. So there are some new launches which are very early for me to talk about, but there will be a time when...
When are they coming up? In the first half of the year, second half?
First half.
All right, shifting focus from Swiggy and that management, talking on Swiggy and the new service to NMDC that's in focus today, because it has announced the prices of iron ore that will be effective from 9th of January 2025, which is today, and they have been fixed as under the Baila lump. The price has been fixed at 6,000 rupees per ton versus the earlier 6,950 rupees. So that's a downtick of 5.5%, and Baila fines, which is priced at 5,060 rupees per ton versus 5,410 rupees, which was the earlier price. So that's a downtick of 6.5%. So that's the price going ahead. On the back of that, NMDC is in focus today, currently reeling under selling pressure with cuts of 1.4%.
Okay, so NMDC is in focus, and the entire metal counters, in fact, they have been in focus for a while now, and with major steel capacity still with PSUs in the country, the steel Secchi Sandeep Pondrik also reiterated that SAIL remains a very important player in the sector. He added that the company is on the path to revival as well. Let's go across and listen in.
SAIL is planning on increasing or augmenting their capacity. They have plans of roughly expansion of another 15 million tons by 2030 with an investment of about 1 lakh crore. It's not as if SAIL is just remaining where it is. They are augmenting their capacity. They are taking measures to improve their efficiencies, their production. All of that is happening. I think SAIL is a very important player in the steel sector. The government has said that steel is not a strategic sector, but still SAIL is an important player in the steel sector, specifically from the public sector, but even otherwise, because they have a capacity. They are the, I would say, the second biggest producer in a way, because JSW has 33 million tons, and then Tata and SAIL both have roughly 20-21 million tons. So they are an important player, and SAIL is important for the government.
All right, with that, it's time for us to slip into a short break. You don't go anywhere. We'll be right back with more stocks in focus.
Hi there, welcome back to Market Fatafat. Let's talk about all the stocks that are in focus and doing well. And one such stock in trade today is Zydus Life, and this stock is in focus in a buzz on the back of a brokerage note coming in by Nomura. It's a positive note coming in, and the stock is also reflecting that because the stock is up by higher by 4%. Now, Nomura has upgraded the stock to a buy call, and the target has also been raised to 1,140 rupees per share. They've raised earnings estimates owing to the higher contribution from the sitagliptin segment of the company. And they estimate the sitagliptin market to be at $300 to $500 million. And they also say that at a discounted price, this opportunity size can be very large for the company. Now, currently, Nomura is factoring in a 5% decline in US revenues and in FY25 versus FY26. They also believe that the company can benefit from the appreciating US dollar, as a large part of the company's exports are from the US, and this is estimated to be 77% in FY27. So, very bullish note coming in. It's an upgrade coming into a buy rating. Target price also hiked to 1,140 rupees per share, and Zydus Life up by almost 4% as we speak.
Alright, moving on then. Gaurav, you picked out the Bajaj Auto for us. Tell us what's the news flow here.
Well, yes, Bajaj Autos is in focus today, and the reason being that now CLSA has upgraded the rating to overweight and also gave a target price of 9,439 rupees on this counter. Now, what CLSA is saying that there are two reasons why the upgrade is coming up for the stock. First is that steep correction that we have seen in the stock price. In fact, when we talk about stock price, the stock is down almost 7% in 1 year's time frame, and from its 52-week high, the stock is down almost by 30%. And at the same time, what they are saying is that there is an improvement in e-two-wheeler franchisee, and that is the reason why they are being bullish on the stock. What they are saying is that the stock is currently trading at 21 times FY27 earning versus the long-term average of 19 times, and despite scaling up, the stock has also maintained its margin at 20%, and that is the reason why they believe that the company deserves 10 to 20% premium for the multiples for the company. At the same time, what they are also saying is that the company is also trying to convert 100cc model buyers to 125cc models, so there is another uptick which may come from that move. And on back of this, when we talk about stock performance, also the market has taken this note in a positive way. The stock is up almost 2%, and on back of this, we will be also watching out on Bajaj Autos.
Okay, so Bajaj Auto in focus on the back of an upgrade coming in from CLSA. That stock also doing pretty well in today's trade. Dhwani, coming to you, you've picked out IGL, Indraprastha Gas, for us on the charts. Last 6 months, the stock has been under pressure, but last 1 month, we've seen the stock recover slightly, a 10-11% uptick coming in. Tell us if this slight bit of a recovery that the stock has seen over the last 1 month can continue, can sustain on the charts, and what are the levels that you're spotting for this one?
Yeah, absolutely. The volume participation that we are seeing today in IGL is noteworthy, and that is the reason why it is on the technical radar for now. On the current level, also one can go long onto it. On the short-term basis, I see 480 as a target coming in on this particular counter. On the lower side, the stop loss that one needs to maintain is going to be of 408. Given this level is sustaining, 480 would be an easy target for this one to achieve.
Okay, so that's the view coming in on IGL. Let's talk about the next stock that's in focus, and that is Lupin. Positive news though coming in from the company. They have got the EIR from the US FDA for their facility located in Pithampur. Now, this was on the back of an examination that was held earlier last year. So, positive news though coming in for Lupin. This pharma stock is in focus today, and it's the US FDA action coming in. This is for their Pithampur facility, which is a significant facility coming in for Lupin. So, very positive news flow coming in. The stock has spiked earlier in today's trading session, but seems to have tempered down a little bit given those giving in the initial uptick that was coming in the stock. But nonetheless, the stock continues to hold on to the green for now, with 0.6% uptick coming in on Lupin as we speak.
Alright, that's the news flow coming in on Lupin, 0.6% uptick. Coming to you, Dhwani, then. Coforge is the name that you picked out for us. Now, this one has given some great returns in the last 6 months. It has, in fact, more than 60% returns. Do you see the positive momentum continue for this one? Is it headed towards 52-week high?
Time to book profits actually in Coforge over here. In today's session, we are seeing a structural breakdown coming in on Coforge. The previous swing, the lows have been given a breakdown over here in this particular counter. From the current levels, the fall should sustain on the lower side till 9,000 odd levels, or 8,900 should also be one of the targets that one could look for it on the downside. On the higher side, the stop loss now is going to be at 95-90 levels.
Okay, so 95.90 on the upside to watch out for Coforge, but well, the IT pack is in focus because TCS numbers will be coming out in an hour or so. So we're very close to kickstarting the Q3 earnings season as well. But while we're talking about IT, which stocks make for good bets within the entire IT pack, let's go across and listen into what Gurmeet Chadda, the managing partner and fund manager at Complete Circle Consultants, had to say about the counters that he's bullish on from the entire IT pack.
IT should do well. So there are three things. One is the currency thing, which has probably near-term impact. Second, if you see the wage hikes have either been delayed or wage hikes have been very low. The big issue was IT companies was attrition. A lot of companies were facing 30-40% attrition with frequent wage hikes. So both of these issues have been solved with issues happening. Third, the US, if Trump walks the talk and really cuts taxes, corporate taxes, you'll probably have more discretionary budgets spent on tech. The only thing is the IT portfolio should not just be IT services. You got to have a combination of companies which is including services, including IP-led names, including companies with the software component being high. So you got to be a little careful there. And even in this space, the good ones are not cheap. So something like a Persistent is 50 times plus earnings. KPIT has seen some bit of a slowdown because it's largely dependent on auto. It's a unidimensional tech company, if I were to put that. So you got to be careful in balancing it out. So we like HCL and Infi in large cap names. We like Persistent. We like Newgen. And we are also looking at, I also consider a lot of these new age companies like Zomato in the digital portfolio.
All right, moving on then. Coming to you, Gaurav, you've picked out Interglobe Aviation, another brokerage candidate. Tell us, what does the brokerage say? Jefferies has come out with a note. What does the note say?
Well, yes, Interglobe Aviation is yet another counter which is in focus because Jefferies, while maintaining buy rating, actually hiked the target price to 5,260 rupees versus what it was at 5,100 rupees. And what they are saying is that Interglobe Aviation, which is also known as Indigo, is actually a unique and strong franchise with a dominant of around 60%, more than 60% of the market share in domestic air travel. Now, it seems that brokerages are being bullish on all the companies where we have seen a great fall, because even here, Jefferies' theory says that the recent stock underperformance actually follows a sharp miss that we have seen in 2Q results. When we talk about stock performance and the recent underperformance, in this year itself, the stock is down almost 6%, and from its 52-week high level, the stock is down almost by 14%. But what they're saying is that in the coming quarters, cost normalization is going to happen, and at the same time, inferior cost curve for peers means an advantage for Indigo, and that is the reason why they are being bullish on the stock. When we talk about stock performance in today's day, in the morning the stock was traded in green. Now it is turning a little in red, but again at a flat move, what we have seen in Interglobe Aviation. So definitely watching out on this counter on the back of the brokerage note coming up from Jefferies.
Okay, Interglobe Aviation and focus on the back of a brokerage note. Dhwani, coming to you, ICICI Bank is the stock that you've picked out on the charts for us. Tell us what's the outlook for this stock. Last 6 months, very flattish returns coming in. Last 1 year, however, the stock has done decently okay for itself. Tell us what's the outlook on ICICI Bank, because fundamentally, last quarter the numbers were pretty strong. Technically, what's the stock looking like?
Technically, definitely, this is one of the counters that has to be discussed today's session, for the reason being the stock has given a breakdown below its 100-period DMA over here, and on the lower side, as of now, also we are trading in this one with a marginal cut over here. On the technical side, we are seeing that the breakdown in this particular counter should go until 1200 levels. So from current levels, ICICI Bank is a sell, and on the higher side, the stop loss that one needs to maintain for this one is going to be of 1290.
All right, speaking of the banks in the financial sector is at a crossroads with the mixed views coming in for the future. While Hiren Ved remains cautious on lending, Ravi Dharamshi sees the long-term opportunities in banks despite near-term challenges, and Prashant Khemka adds perspective on PSU banks and selective opportunities. Let's hear from the experts.
I think by and large financials is still, more constrained by credit growth. You'll have to pick and choose, but on the whole, I'm not very excited about lending as a space.
I do believe the best in terms of the asset quality, the best in terms of, the credit deposit ratio, the deposit growth is probably behind us. Deposit growth will remain in a 13% kind of a range. The NIMs that were compressing because of the cost of deposit, I think that should start easing with the hopefully the interest rates also coming down and the liquidity being improved through the CRR cut. So I would say one has to reset the expectations in terms of what is the kind of growth one should expect and what is the kind of return ratios one should expect. Now it will probably be a 12 to 15% grower with a 12 to 15% kind of ROE. And if one adjusts to that fact, then I think from that perspective, the valuations are now becoming really, really attractive. And one should be long on this place with a 5 years perspective.
I've been, professionally investing at my prior firm or now for coming up to 18 years in India. And we have, for most part, majority of these 18 years, we have owned PSUs. Yes, we may not own them in as big a proportion as the benchmark, but there are from time to time very attractive opportunities within PSUs, and otherwise also from a risk management perspective, we do tend to own PSUs in the portfolio as well.
Okay, well, on that note, that's the perspective coming in from our experts on what the banking and financial space is looking like and what's the outlook for this sector in the future. But on that note, we'll wrap it up on this edition of Market Fatafat. Thank you to our guests for joining in, Dhwani as well as Gaurav also for weighing in from the research team. And we'll take your leave, but you don't go anywhere because closing trades is up next.
If you like this video, then like, share and subscribe to ET Now.